Good day and welcome to Lesson 3. In this lesson, we will be discussing the identification, recognition, and measurement of provisions in accordance with IAS 37. Please note that for Unit 2, we use the old definition of a liability. Provisions can be found in Section 6 of Chapter 14 in the textbook. Please ignore the following when using the textbook for Unit 2. Example 14.9 as it relates to the calculation of provisions using time value of money, any reference to executory contracts, and any reference to restructuring provisions. Let's have a look at the definition of a provision again. A provision is a liability of uncertain timing or amount. Now, because a provision is a liability of uncertain timing or amount, we need to always check whether the definition has been satisfied. When it comes to provisions, the problem usually lies with the recognition criteria. So an item may be the definition of a liability, but it cannot be recognized as a liability either because the timing is uncertain or the amount cannot be measured reliably. So it is then recognized as a provision. So if any one of the two recognition criteria are not met, then it will be a provision. So when is a provision recognized? A provision is recognized when there is a present obligation, which could either be a legal or constructive obligation, as a result of a past obligating event and settlement of which will result in an outflow of resources. Up until here, we are effectively trying to prove whether the item is a liability. Because remember, a provision is a liability. Once we have been through the definition of a liability, we now have a look at the recognition criteria. The recognition criteria stated that it must be probable that resources will flow and that a reliable estimate can be made. However, if any one of these items are uncertain, then it will be recognized as a provision. But how much would we measure the provision at? If there is uncertainty about the amount of a liability, then we will use the best estimate of the expenditure required to settle the obligation. So how much would you need to pay to settle or transfer the liability? This will be done by taking into account the judgment of management, experience of similar transactions. Maybe something similar has happened in the past, so how much did it cost you to settle the liability? Reports from independent experts, or evidence provided after the reporting period. Maybe evidence came to light after the reporting period that now provides us with the best estimate of the expenditure required to settle the obligation. When measuring provisions, you need to ensure that the following is taken into account. You need to ensure that the amount is before tax, that it excludes VAT, that you have taken into account the associated risks and uncertainties, and that you have taken future events into account. For example, expected cost reductions, anticipated technological advances, or future legislation, but only future legislation that is virtually certain to be enacted. If there are any uncertainties, you need to ensure that the uncertainties are disclosed. Now let's take what we have learned earlier in this video and look at an example. An entity sells goods with a guarantee which covers the cost of repairs for any goods with defects and returned within 6 months after purchase. If there are minimal defects, the repairs will be 1 million rand. If there are significant defects, then the repair cost will be 4 million rand. The entity's expectation for the current year is as follows. They expect that 75% of their products will have no defects, 20% of their products may have minimal defects, and 5% of their products may have significant defects. The entity assesses the warranty provision expectations as a whole. The required asks us what is the expected cost of the warranty provision. In order to calculate the expected cost of the warranty provision, we will take into account the entity's expectation, as this is probably based on the entity's experience in the past in terms of their warranty provisions. This technique is called an expected value and can be used to determine an appropriate amount at which to measure a provision. To calculate the provision using this method, we take into account the expectations based on the prior knowledge provided by the company. Based on prior knowledge, there is a 75% expectation or probability that none of their products will have defects, so the cost would be 0. Then, based on prior knowledge or experience, the company expects that 20% of their products will have minimal defects, so the cost implication would be 1 million rand multiplied by 20%, so the estimated cost would be 200,000 rand to repair the products. And lastly, based on prior knowledge or experience, the company expects that 5% of their products will have significant defects. So the cost implication would be 4 million rand multiplied by 5%, so the estimated cost would be 200,000 rand to repair the products. So the cost of the provision will be 400,000 rand after taking every expectation into account. Now that we have covered the measurement of provisions, let's have a look at the presentation and disclosure of provisions. Because a provision satisfies the definition of a liability as well as the recognition criteria, provisions will be recognized in the statement of financial position under current liabilities as the line item provisions. With provisions, a company would also need to disclose the provision in a note to the statement of financial position. In the note, the company needs to disclose a description of the provision, the expected timing of any outflow of economic benefits, any significant uncertainties about the amount or timing of the expense, the opening and closing carrying amount. If there were increases or decreases during the year, it would also need to be disclosed. This will then provide a reconciliation of the provision at the beginning of the year and at the end of the year. Any amounts used and unused in the year, any amounts reversed, and if some information is not available, you need to disclose the fact. And that brings us to the end of lesson 3. Please complete activity 2 before continuing with the next lesson.